Hi, everyone. Welcome to our session. I'm Abraham Tachjian, Director in Digital Banking with TPWC in Canada. I'm joined today with Joseph Healy, one of the co-founders of Judo Bank in Australia, an SME-focused digital bank. Let's get right into it. Joseph, thanks for joining me today. Tell me, what possessed you to start a brand new bank?
Great question, Abraham. Well, I'm a career banker, and so I understand the industry and the business inside out. I felt that over a period of 10 years, or perhaps even longer, the banks, as they industrialized their operating model, had taken the SME, the business community, for granted and basically left them behind. And I felt that the service that small to mid-sized businesses were getting from the banking system had been deteriorating for quite some time. And that resulted in what I would describe as a market failure, which created an opportunity to build a bank like Judo Bank to come into that market failure.
Okay. So if there's such a need for digital banking tools for SMEs, why do you think the digital market has kind of ignored SMEs? You don't see as many digital banks that focus on SMEs. Predominantly, you're looking at retail propositions. Why do you think that is?
Well, I think largely because SME banking is significantly more challenging market to bank than consumer. I mean, if using economic jargon, if you think about the consumer market, it's information efficient. You can get access to information on URI relatively easily, whereas in the SME market, you get access to some information, but as the economists call it, it's quite an information inefficient market, and you need that human judgment, if you will, to interpret and structure information so that you get a more accurate picture of the credit profile of SME businesses. So given that challenge and given the fact that it's an expertise that lends itself to human judgment, the bias has been towards consumer retail banking in terms of the new business models.
Okay. And so you raised two very interesting points there. Number one, your background as a seasoned, experienced banker. And number two, the fact that this is quite more difficult than starting a retail proposition. Now, oftentimes, when you speak to founders of digital banks, they love to talk about how they bring in talent from outside of banking to bring in that fresh thinking. So I'm curious, based on your experience and the fact that starting an SME digital bank is much harder, do you think having a background in banking is more beneficial? Is it more advantageous, or is it a disadvantage still?
Oh, great question. I mean, it all depends on what you're trying to build. I mean, when we were planning Judo Bank, we wanted to build a substantial bank. So to use a metaphor, we laid the foundation for a 10-bedroom house, even though we were only needing a 2-bedroom house for the first 3 or 4 years. But we wanted to make sure that the foundation was there so that we could build on and build scale. And to build a sustainable and substantial bank, I believe that experience in the banking industry is a huge advantage. Now, you've got to combine that experience with outside thinking, particularly on the application of technology. But if you're looking to build a meaningful business, as we are at Judo Bank, really understanding the industry, understanding the regulator, understanding how to select good people, we find that to be a huge asset.
Okay. Now, Australia is really unique in the sense that over the last couple of years, you've seen an influx of brand new digital banks in a market that's predominantly dominated by incumbents. Why do you think that's the case? Why do you think there's been so many new digital banks going live in Australia?
Well, a couple of reasons. First of all, Australia is one of the most profitable banking markets in the developed world. I mean, the 4 major banks that dominate the market, 85% market share, make between them about $35 billion after tax in a country of about 30 million people. If you add New Zealand in, because New Zealand is very much integrated into the banking system, it's hugely profitable. Also, it's a market where customers have been disenfranchised or dissatisfied with the service that the banks have been offering. You can imagine these very comfortable, large oligopoly structure, maximizing profit, providing poor service. So people saw that with the government open to the idea of new entrants, that there was a very lucrative market with a very dissatisfied customer base to come in. Now, so since over the course of the last 3 years, there have been 4 new banking licenses issued, and prior to that, nothing in about 50 years. And now Judo is one of those 4. The other 3 are in the retail market, but only I think 1 of the 3 are actually doing any business. The other 2 are largely still engaged in building out their platforms. We went fast to the market because we had experienced management. And it's a strong belief of mine that great technology is important, but great management is critical if you're going to build a successful, sustainable business. So, the environment remains attractive to new entrants, and we would like to see more new entrants come into the Australian market.
Okay. Now, typically when you're getting into business, you usually don't have, how do I put this, the same challenges as you would do with starting a bank. Now, when you're dealing with the regulator to get your license, sometimes some upstarts may be a little discouraged from approaching the regulator with ideas or actually going through the licensing process. I'm curious to hear about your experience in dealing with the regulator in Australia. We'll typically hear, that it's very difficult to approach regulators. The thinking is "quote unquote" old school, or however else you'd like it. I think the audience would really benefit to hear about your experience in terms of starting a brand new digital bank and how easy it was or how challenging it was dealing with the regulator in Australia.
Yeah, well, I think regulators the world over are pretty much very similar. They are very traditional. They're very conservative. They tend to be cautious in thinking about new entrants. We benefited from the fact that I and others had in the team had quite a good relationship with the regulator from our previous executive roles. But when we were thinking about Judo back in 2016 and really 18 months or so before we were going to come to market, 2 years before we come to market, we went to see the regulator and we said, look, we want to build a relationship. We're not asking for anything, but we want to share with you how we're thinking about building a new bank. We don't want you to read about it in the media, and we want to maintain a dialogue because your insights, advice, and understanding your expectations will be hugely helpful to us. So anybody thinking about a new bank, I would strongly encourage them to try and get access to the regulator early, just to start the relationship and ask for guidance and support, and make them feel that they're part of helping create a new, more competition in the industry. So early engagement is important. I know it's easier said than done because sometimes it's difficult to get in, but speak to people who understand the regulatory environment and get some guidance on how best to access the right people. Okay.
So essentially, engage them early, come to the table with your ideas and speak to them frequently, and then find the right partners, whoever that could be, that can help you along with the journey.
Absolutely critical. I mean, they will very much appreciate early engagement. Regulators do not like surprises. So if you're planning on coming into the market, do them the courtesy of reaching out. And I would strongly encourage people to think about asking the regulator for some guidance. How should we think about this, navigating this engagement? What's your advice for us? What should we avoid doing? One of the things about building a bank, and I'm very open about this, is you learn a lot of good things and you make a lot of mistakes. And speaking to people who've been on that journey and listening carefully to their advice will be huge positive to anybody's endeavors in terms of coming into thinking about building a new bank. There's a lot of experience out there, and tapping into it is important.
Speaking of that journey, what would you say would be the most difficult, the most challenging part of this entire process from the start all the way to the launch? What was the one thing that made you wake up in the morning and say, oh, I don't want to go to work today? As much as you're a founder, what was that one thing that was the most challenging?
The capital, the early capital, because you kiss a lot of frogs before you meet the prince. And we would have visited 80 or 90 potential investors in Australia and China, Hong Kong, Singapore, Abu Dhabi, London, New York City. We went right around the world several times. Everybody said, we love the idea. We think the management team is credible. Come back and see us when you've made some money. And of course, you need to get the capital. But, we find that you've got to be very resilient. There are many days where the dark tunnel, there's no light at that tunnel. It feels like things could fall over. But when we raised our first 20 million, we very quickly then raised over close to 800 million in about dollars of equity in about 18 months. And so capital, we don't worry about capital anymore. But in the early stages, we would have spent the best part of a year trying to raise capital, and it requires huge character resilience, because it's easy to be despondent with the lack of success early on.
And what was that one thing that pushed you guys over the hill, that finally clicked with an investor and they said, right, this is the product I want to invest in, this is the team I want to invest in?
Well, we find a couple of entrepreneurs in Australia who I had known for quite some time, who had always been quite critical of the banks. And I said, well, help us raise 10 million. We'll put, the management team will put a third of that of our first 20 million in. But we need to raise first 10 and then another 10. And the entrepreneurs said, okay, we will find 2 or 3 of our friends who will come in behind you. So it was an individual rather than an institution. But when we got the first 20, then the next 100 came relatively easier. And then after that, it was progressively a relatively straightforward exercise. Okay.
Snowballed from there. Great, as usual. I want to go back to a quote that you made a few years back, and I really love this. This is one of my favorite quotes you've made. You said that at Judo, you want to be enabled by technology, but not defined by it. Now, if you look at the digital banking landscape globally, where do you think upstarts fumble when it comes to their technology band? When do they go too far with embracing technology? I think the point I'm trying to make is technology is an enabler, but at what point does it become a detriment in that you're relying too much on it?
Well, I think technology is critical. So, I mean, and there's no question about that. But technology in of itself does not make a great business. You have to have a very strong management team, very strong sense of vision and purpose. And when it comes to the SME market, we said that technology is there to enable a great service, not to define a great service. A great service is going to be a combination of human, high touch, high tech, making sure you've got that human engagement. I think too many technology-driven business models miss that point and then struggle to scale their businesses. So I'm not downplaying technology, the opposite of that, but great businesses, in my opinion, are about people that are enabled by great technology, not defined by great technology.
Okay. So I guess the point you're trying to make is that it's the team around you that matters. How difficult was it to recruit that team? Because early on, I assume when you were approaching them with this fresh idea, it wasn't as common as it is today. How difficult was it to recruit that initial team, that core team that helped you build this out?
Well, I hired 1 or 2 people early on. Great believer that A's attract A's, B's attract C's. So high caliber people. People then say, hey, look who's at Judo, what's going on across there? And we were very successful in hiring the management team that we have today. We've now got 250 staff. We've looked at about 1,700 people that have applied to join Judo. We're very selective. But great people, it's all about great people.
And I'm sure a lot of founders that'll be listening in today will have this in the back of their mind. But what do you look for when you're hiring people to join your team?
Passion about the purpose, about the vision, believing it can be delivered on. People who have a healthy personal risk appetite. Leaving the comfort of the warm bath that is the big banks and coming into a startup and trying to take on the big banks. You want people who've got attitude, who have a healthy entrepreneurial risk-taking mindset, but believe passionately in the vision and the purpose that underpins the existence of the company.
Right. I have to say, it's the first time I hear the bath analogy. It's pretty good. I may use that for myself in the future. You mentioned earlier that one of the instigators for the growth of digital banking in Australia was the displeasure some folks had with the existing institutions. How did you gain their trust as a new upstart, and how were you able to get the message across that you're different, that you're willing to serve them differently? How did you gain their trust from that perspective?
Well, we went back to thinking here about the small to mid-sized business economy. We said, that we said that we were building a company that was only going to specialize in small to mid-sized businesses. That was going to be a combination of modern technology and traditional values around human engagement, and that we understood the frustration that small businesses had been experiencing over a number of years. And that we were going to set our stall out very firmly and be very transparent, be very ethical, and be very customer-centric. Now, people hear that and they dismiss it the first time. So you've got to constantly be walking the talk and pointing to evidence. It's at the end of the day, people will want evidence that you're delivering on what you said you will deliver, what you said you will do. And over the course of the last few years, we've been able to do that. And therefore, the business has grown. It's over $2.5 billion of lending. It's now profitable. We're adding staff every month, and we're just thinking about a great future.
Right. Very interesting. Well, that's all the time we have. I want to thank Joseph for joining me. I hope you enjoyed our discussion and enjoy the rest of the Hong Kong Fintech Week.
Thanks, Adrian.